In the shadowy world of financial markets, few scandals have rocked the rare metals industry quite like the collapse of the Fenia Metal Exchange. This once promising venture, which burst onto the scene with grandiose promises of high returns and zero risk, would ultimately leave thousands of investors reeling in its wake. The story begins in 2011 when the Fenia Metal Exchange opened its doors in Kunming, China. With slick marketing and the allure of exotic metals, the exchange quickly captured the imagination of eager investors. They were promised returns of up to 13% annually, a figure that seemed too good to be true in a world of low interest rates. But the reality behind Fenia's glittering facade was far more sinister. Over the course of 4 years, the exchange would raise a staggering $6.4 billion from unsuspecting investors. Many poured their life savings into the venture. Lured by the siren song of easy wealth and the false security of government backing, as the money poured in, Fenia's influence grew. The exchange claimed to hold vast stockpiles of rare metals like indium and bismuth, enough to corner the global market. Prices for these obscure elements skyrocketed, driven by artificial demand. But beneath the surface, a web of lies and manipulation was beginning to unravel. The first cracks appeared in 2015 when Fenia suddenly froze all with. Overnight, thousands of investors found their accounts blocked, their money trapped in a system that was rapidly Panic spread like wildfire as the true nature of the scheme began to emerge. Public outcry was swift and fierce. Angry investors took to the streets, demanding answers and the return of their hard-earned money. But as government investigators dug deeper, the full extent of Fenia's fraudulent practices came to light. The promised stockpiles of rare metals were largely non-existent, the high returns nothing more than a mirage. The collapse of Fenia sent shockwaves through the rare metals market. Prices for indium and other niche elements plummeted, exposing the artificial nature of the demand Fenia had created. Legitimate businesses in the sector found themselves caught in the fallout, struggling to adapt to a market in freefall. For the thousands of individual investors caught up in the scheme, the personal toll was devastating. Many had invested their entire life savings, believing in the promise of a secure financial future. Now, they faced the grim reality of lost homes, shattered dreams, and uncertain futures. As the dust settled, attention turned to the perpetrators behind this massive fraud. Shan Juliang, the founder and chairman of Fenia, was arrested, along with 20 other The ensuing legal proceedings would drag on for years, a testament to the complexity of the scheme and the vast sums involved. In 2019, justice finally caught up with Shen. He was sentenced to 18 years in prison for crimes including embezzlement and illegal possession of weapons. But for many of Fenia's victims, this punishment did little to ease the pain of their losses. The Fenia Metal Exchange scandal serves as a stark reminder of the dangers lurking in unregulated financial markets. It exposed the vulnerability of investors to sophisticated fraud schemes, particularly in emerging sectors like rare metals trading. In the aftermath, Chinese regulators have tightened their grip on commodity exchanges, implementing stricter oversight and more rigorous licensing requirements. But for many, these measures come too late. The collapse of Fenia also raised uncomfortable questions about the role of local governments in promoting and tacitly endorsing such ventures. Many investors had been swayed by the apparent official backing of the exchange, a factor that ultimately proved to be yet another layer of deception. As we look back on the Fenia Metal Exchange scandal, it's clear that its impact extends far beyond the immediate financial losses. It has eroded trust in financial institutions, particularly in emerging markets, and highlighted the need for greater investor education and protection. The story of Fenia is a cautionary tale, a reminder that in the world of high finance, if something seems too good to be true, it probably is. It underscores the importance of due diligence and skepticism, even in the face of seemingly ironclad guarantees and official endorsements. For the rare metals industry, the Fenia scandal has been a painful but necessary wake-up call. It has forced a reevaluation of pricing mechanisms and supply chains, leading to greater transparency and more realistic valuations. But perhaps the most lasting legacy of the Fenia collapse is the human toll it has taken. Thousands of families have been left to pick up the pieces of their shattered financial lives. Many continue to fight for compensation, their struggles a poignant reminder of the real-world consequences of financial fraud. As we move forward, the lessons of Fenia must not be forgotten. Regulators, investors, and industry players alike must remain vigilant against the next potential scheme lurking on the horizon. Only through constant scrutiny and a commitment to transparency can we hope to prevent such devastating frauds in the future. The Fenia Metal Exchange may have crumbled, but its shadow looms large over the financial landscape. It stands as a stark warning of the dangers of unchecked greed and the devastating consequences when trust is betrayed on such a massive scale. In the end, the Fenia scandal is more than just a story of financial loss. It's a human tragedy, a tale of broken dreams and shattered lives. As we reflect on its impact, we are reminded of the profound responsibility that comes with managing other people's money and the dire consequences when that trust is abused. The collapse of Fenia serves as a grim reminder that in the world of finance, there are no guarantees. It underscores the need for constant vigilance, robust regulation, and a healthy dose of skepticism. Only by learning from such catastrophic failures can we hope to build a more secure and transparent financial future for all.